Look, reporting, you're absolutely right. Reporting season is always an interesting word. Whenever you see it, you see all the analysts and professional investors getting very tense, and then their eyes turn red, and the hair goes messy because it's a very important time. This is when the company gets judged on, how they went in the last 6 months. It happens twice a year. Last 6 months, how they went, and then also they can give investors a bit of guidance of what is to come in the next 6 to 12 months. So it's incredibly important period. The way we look at reporting season is that it's a good chance to get a good glimpse into how management is thinking about what are some of the pressing issues, especially with the state of the economy at this point. So we want to take this opportunity to speak to all the management post their results, talk to their strategies, talk to what they're seeing, talk to opportunities, because this is the time where you can really uncover opportunities when other investors could be missing them. So yeah, it's an incredibly exciting time. It's just quite intense when when there's about 20 results coming out in 5 minutes, and then you kind of need to work out, the noise from the actual detail of what the company's saying.
Well, that is actually a great segue into the next question, Jun Bei, because as retail investors and a lot of people in the Equity Mates community, it can often be frustrating when your company seems to report such positive outlook and numbers, yet it doesn't meet expectation, and so the share price suffers. How do you then, I guess, or can you help us understand from your point of view, what is signal and what is noise, and how to, I guess, work through that as a retail investor?
Yeah, that's incredibly interesting. So, with the share price reaction, a lot of time it's all about how the result compared to the analyst expectations. Because this world is all about expectations. When the company promised people too much, you come out and disappoint, then share price will go down. And so, on that basis, it's very important to know what other investors or analysts are looking for, whether it's the revenue growth or whether it's the cost control, whether it's the dividend. You need to know what other people are looking for. Then when the result come out, you can make the rational assessment knowing where the share price is going, because you know what people are expecting, and they disappoint on that, share price will go down for the day. But then the question for a retail investor is, you know what, that's just a short-term view, because the company is still growing at this earnings, is still delivering, whatever fundamental you work out, maybe this is a buying opportunity. So it's very important to work out why you're buying the company and whether they have delivered and what the outlook look like, and give yourself the opportunity, to steer away from the noise and what other short-term investors might or might not do, gives you opportunity for you to build long-term positions.